What if I told you a recession could be your ticket to becoming very wealthy? And what if I told you that 57% of Fortune 500 companies were created during recessions or bear markets? Meaning, in simpler terms, a recession is the best time to grow your net worth, to start a business, to get ahead in life financially. This is true if you are creating a Fortune 500 company, or you are just trying to capitalize on a situation to better your family in markets. See, you don't have to create the next Airbnb or Uber. Probably odds are you just want to take care of your family and have a bit of financial freedom with the time you have here on Earth. And that is what this video is designed to help with. So if you want to make money, if you want to make more of it, be better prepared for what is coming next, watch this video. If you don't, then click off right now and forget you ever seen this channel, because unfortunately, if those are not your goals, this channel is not going to help you. So first and foremost, before we get into all of the historical precedents on how recessions create millionaires, like magnitudes, many magnitudes more than lottery winners. We'll get into that. Trust me, I'm not going to leave out that because that's fascinating, at least to me personally. One thing needs to be clear. We are heading into a recession or something very close to it that will cause a bear market in markets. It's almost unavoidable at this part. Besides the fact that Trump, Besson, the White House themselves are calling for a detox period. They're saying we're going to go through a period of transition in the economy, including the data that is out today that shows the labor market is about to implode. Something you only see during recessions, with a positivity rate that is much better than really any other piece of data.
From corporate America, when you say that when we're in a period of detox, you used that word on CNBC last week. Is that a euphemism for recession?
Not at all. It doesn't have to be, because it'll depend on how quickly the baton gets handed off. Our goal is to have a smooth transition. But I tell you, Sarah, the easy thing for us to have done would have been to come in and just keep this massive spending level going. And it's unsustainable, but could we have kept it going for a year, 2 years, maybe even 4? Maybe, but you're risking a financial calamity. So, we are trying to get this tax bill done. We are controlling expenses. And when we get the tax bill done, so if you can change the trajectory, up revenues, up economic growth, hold expenses flat, or do the unthinkable and cut expenses, then that's a pretty good trajectory on growth. And if we go back to the model in the 90s, that's exactly what happened. We'd see interest rates come down, we'd see the private sector take up the slack from the government, because right now we have excess employment in the government, and that those people can be moved to the private sector.
Yeah, the question is what's realistic when it comes to cutting the debt. I think you yourself have said you want to get to a 3% deficit to GDP. We're, almost 6.5% last fiscal year. Doge is working on it. $115 billion in Doge savings so far, though, so that's not going to make a dent. Where do you see the meaningful cuts coming from when you talk about rebalancing away from the government?
Well, look, I don't know what your family budget is like, but to me, $115 billion is a lot of money. That's 5% of the deficit last year. So I think that's a pretty good start, and it's only been 6 or 8 weeks. So there's probably a lot more that we can do. And there's two parts to this. It's accelerating the economy, growing the revenue base, and controlling expenses. The U.S., we do not have a revenue problem. We have a spending problem. The government revenues are right at the long-term baseline that the previous administration just blew things out to the upside, and we're trying to get this under control.
What about the economic signals that you're seeing right now? We saw this surge in small business optimism after the election because of some of the policies you're talking about. And then for the second month in a row now, we've seen a drop. Also, the Atlanta Fed, for instance, is forecasting a negative growth rate for the first quarter. I could go on about some of the confidence warnings right now, but I am curious if you're concerned about what you're seeing in the underlying economy.
Well, sir, I think you've been away, but I think the Atlanta Fed has revised up their number to a positive number. That was due to gold imports, which was kind of an anomaly. So, I'm not worried about a very noisy indicator. And again, as I told the Business Roundtable yesterday, as I tell your viewers, what we're trying to do is create economic certainty. We're going to do it with the tax plan. We're going to do it with deregulation. And I also said to the Business Round, I think it was 135 CEOs yesterday, if you came out with a plan similar to what Doge wants to do with the federal government, all your stocks would go up 15 or 20%. It would be considered a miraculous restructuring, cost savings, and put you on a sustainable course. So I think we're not getting credit for this yet. I think we will. So
I don't know about you guys, but that did not sound like everything's okay. It just didn't. It sounded like Ben Bernanke's now famous speech in 2007, 2008, where he basically said everything was fine, and then within 2 months they were doing emergency rate cuts. That's what it sounded like to me. Let me know what you guys think. And he kind of sounded like a bit of an asshole during that clip where he said to Sarah, I don't know if you've been away, but no, in fact, the Atlanta Fed GDP is at negative 2.4%. You're still very negative. Nothing has changed there. Now, I'll tell you the good and bad news when it comes to a recession and really a bear market overall. The good news is if you are of working age, if you have a job and you can make money, then you're in a good position. Bad news is if you're retired, then you're going to be in a much worse situation. Okay, so it really depends on age here. If you're less than 65, right, you're probably fine. Even if you're like 60, you're good, dude. Don't even worry. Because the average bear market, while some of them can be large, like the Great Depression was 34 months, World War II adjustment was 36 months. Stagflation bear market of 1973 through 74 was 21 months. Dot-com bust, 31 months. Great Recession, 17 months. The average bear market is about 10 months. Okay? So you're good, dude. Don't worry. Good news is, though, you have 10 months potentially. 10 to 14 months is kind of the range, right? Besides some of your long bear markets, like, again, the post-adjustment World War II and Great Depression. Like, those kind of skew the numbers a bit, but really like 10 to 14 months is your outlook you should be thinking about right now. If we do get a pullback that lasts that long, you're going to have a lot of time to make money, to work your job, to really take advantage of this upcoming recession. Because do not be fooled. As Peter Burson on X here writes, the unemployment expectations have surged to levels, quote, never seen before in the University of Michigan survey, except during recessions. Anytime you've been this low, you've had a recession. Every single time. Now, again, there's a lot of new things happening right now, and it leads me to believe this recession's going to be coming indefinitely, right? I don't think there's a way to avoid it at this point. Tariffs and Doge and a confidence issue in the markets. Hell, even Dollar General said people are trading down, like, at increasingly higher paces, that has actually accelerated in the last 3 weeks. You've gotten similar warnings from all of your other retailers. I don't know what else you need to see to really understand that you're going into recession. Okay? It's only a matter of time. And this is a good chart as well for this. This kind of breaks down as well some of the more recent recessions and what's going on with the labor market. I mean, this thing tends to follow the BLS report. The non-farm report here is the gray line, and the UMich expected change in unemployment during the next year is the red line. They tend to roughly follow each other, right? Roughly. There's some points they kind of diverge a little bit. Sometimes one moves ahead of the other. But it's clear when you're down at these levels, you're like full-blown recession, okay? And it's only a matter of time before you see the non-farm payroll report actually start to reflect that weakness. Now, I think what could start to reflect the weakness is some of the government layoffs that were not represented as much in the last labor report, okay? So the next couple reports are going to look pretty ugly. Now, there's obviously a lot of other things that I could point to. GDP is deep negative territory for Q1, Doge, tariff uncertainties, consumer pulling back, personal spending that is plummeting, companies that are really pausing investments because of the tariff uncertainty. There's many other additives you could put to this, but without going on for 30 minutes, you're going into a recession. The faster you understand that, the more money that you will make. And even though the markets are down 10%, if we do go into a recession, I don't think it would be illogical that we could hit maybe 2022 lows, right? Who's to say that can't happen? If you were to go to 2022 lows right now, you'd fall 40% from here. 10% drop is nothing if that's the kind of downside we could be looking at. Now, ultimately, I don't know where markets are going to go. Let's be honest there. But the downside risk is to the downside, right? Or the distribution, if you will, of the bell curve is to the left. The downside risk is getting fatter, or the tail is getting fatter, if you will. As I think, did one of the Fed speakers say that recently? Somebody used that recently, and it was like, wow, they maybe they're listening to the channel where I talked about the bell curve. Nonetheless, you're gonna fall further. Don't know how far, but you're gonna fall further. But there is a way to capitalize on this, as recessions create more millionaires than lottery winners by a long shot. During the Great Depression, from 1929 to 1939, more millionaires in inflation-adjusted terms emerged than in any other prior decade, per some economic historians. For an example, figures like Joseph Kennedy I and entrepreneurs like Harlan Sanders, who laid the groundwork for KFC, built fortunes by seizing opportunities in distressed markets. A similar pattern occurred post-2008 Great Recession, with the number of U.S. millionaires growing from 6.7 million in 2009 to 8.4 million in 2012, a 25% increase in just 3 years. Wow. You wouldn't think that when you think about recessions, and that's why this is so kind of counterintuitive. It says investors like Warren Buffett famously capitalize on recessions, like his 2008 investments in Goldman Sachs. Entrepreneurs launch recession-resistant businesses, think Microsoft 1975 post-oil crisis, or Airbnb in 2008. Studies show that 57% of Fortune 500 companies were founded during recessions or bear markets, per a 2009 Foundation report, many creating millionaire founders. If we estimate conservatively, each major U.S. recession, 11 of them since 1950, might produce thousands of new millionaires via investments and startups. For instance, the dot-com bust of 2000 through 2002 and Great Recession of 07 through 09 saw each millionaire counts rebound and grow significantly within 3 to 5 years. Potentially 100,000 plus new millionaires per event when factoring in stock market recoveries and business successes. So with both of these recessions alone, you created over 200,000 new millionaires, over 100,000 per recession. For context, lotteries only produce around 100 to 150 new millionaires annually in the US. So you're talking about something that is 1/1000th the size of recessions in terms of wealth creation. And I know a lot of people, they love the lottery, they love playing, but if you really love to gamble and to make money, it should be during recessions. You'd have much better odds of coming out on top. It says you've only seen about 3,000 to 5,000 lottery made millionaires over the past 30 years. Like literally, you're talking hundreds of times more millionaires have been created in just the last 2 recessions, right? Until today. Kind of crazy. It says a single recession might create 10,000 to 100,000 new millionaires over a 3 to 5 year recovery. In contrast, lotteries produce 100 to 150 millionaires yearly. Over a recession's lifespan, lotteries might yield 500 to 750 millionaires, far fewer than recession-driven gains. Since 1950, 11 recessions have spawned 110,000 to 1.1 million millionaires, a broad range due to varying severity. Lotteries operating widely since 1980 might have created 4,000 to 6,000 millionaires by 2025. Recessions likely outpaced lottery by an order of magnitude. Your odds of becoming a millionaire via lottery are minuscule, 1 in 292 million for a Powerball. In a recession, strategic action, investing, starting a business, offers far higher odds for those with resources, skills, though is not guaranteed. It says over the decades, cumulative effects of recessions likely exceed lottery wins by 10 to 100 times over. However, this comes with a caveat. Recessions benefit those with capital, resilience, or entrepreneurial drive, while lotteries are egalitarian, butchered that, in their randomness. So yes, recessions outstrip lotteries in raw numbers, but they're not a ticket anyone can buy. So let's get this straight. What have we learned so far? We've learned that the US economy is going into a recession. Again, I'm not a financial advisor, I'm not a financial planner, any funky crap could happen, but all signs lead towards recession. We've fallen 10% on the headline markets, but you could be set up for a much larger decline. And I think the reason, again, for that is we were so caught off sides. Markets had done so well, expecting all of the positive things from the Trump presidency, really overlooking the short-term pain, right? And that's why markets were as high as they were. We should have never been that high. In obviously, hindsight's 2020. So that's why we've seen a rapid fall. And that's why the percentage decline that we could actually see could be so large, because nobody had recession on their playbook. And as that becomes a reality, that's where markets are going to get hit even more. We have learned here in this video that Scott Bessent kind of is confirming a recession. You've heard Trump talk about a quote-unquote detox, that things are going to get worse before they get better, and there is plenty of evidence, including the data that came out today from the University of Michigan survey showing essentially recessionary kind of labor markets, okay? All of the signs are there. Whether or not you want to believe them or pay attention to them, that is totally on you. We have also learned in this video that if you have capital, if you are willing to work, to make capital, to invest that capital when times are tough, aka during recessions, you have a pretty good chance of coming out on top of things. And ultimately becoming a multimillionaire. We also learned during this video that the average length of a bear market is about 10 to 14 months. So the good news is you have time, okay? You have time to make money, to put that money to work, to invest, okay? That's huge. Like 2020, you had a big crash, big crash, but you could only benefit from that if you had money already available. What, you got like 1 check, 2 checks during this crash? Like, if assuming you work just a normal job, right? You didn't have time to really position into this. It was a quick just recovery. 2022, you obviously had a chance to position into this as well, and hopefully a lot of you guys did. And if you did, you're still in a much better position today. Like if you bought Meta at $90, like I did, you're probably doing pretty well still. You kind of have to be. Well, what if you get those kind of opportunities again? Are you going to take advantage of it? Is the big question. Now, I would be lying if I told you, again, how low markets are going to fall or how far markets are going to fall, or if I knew indefinitely that, what the timeline is going to look like. Okay. I think personally, in a bad case scenario, like not even the worst case scenario, but like we actually do go into a recession, during that moment, you could see markets fall to 2022 bear market lows, which again would be about 40% lower from here. That would be a top to bottom move of 50% on the SPY. It's going to look even uglier on the NASDAQ, I'm sure. Okay. Now, if things are only moderately bad, then you fall probably to that 475 level, 465 level, like your highs of 2021. In that scenario, you're still looking at downside of about 17.5% from here. Although if we go into a recession, I think you're going to far outpace that to the downside. Potentially, you could even fall to your COVID, pre-COVID highs around 2020, right? That would be a decline from here of about 43%. I'm theorizing, okay? I don't know exactly what's going to happen, but just judging on where markets are, expectations, how the economy could evolve in the short term. Of long term, we're going to be just fine. And that's where the opportunity comes in. This is not going to be a lost decade. This is not going to be, something that you really need to be too fearful about. But in the short term, it's going to get ugly. And the faster people understand that, the more money you're going to make. And again, your guess is as good as mine as far as where the downside ultimately is, where the bottom will be. But now is the time to get ready for that. Now, in my opinion, I think one of the best ways to position for this could be in TLT, okay? Because rates are going to plummet as we go into this recession. TLT is going to skyrocket higher, and that's a pretty surefire way to ride out this volatility, this recession, and then be able to flip out and make some bigger moves. Like for an example, if we go into a recession, okay, TLT is going to go up. You're going to make gains on your TLT, right? If we go into recession, you could see TLT in the 140s again. Like that wouldn't be super shocking, in the 130s, 120s or so, and actually make some gains in your portfolio from that perspective, okay? And get paid a dividend in the meantime, okay? But by the time TLT is in the 140s, 130s, or even 120s, markets are going to be in a very rough place. Then you have the opportunity to get out of treasuries and back into stocks. Now, that's not financial advice. I'm not a financial advisor, not a financial planner. But that's personally what makes sense to me if you had cash you wanted to deploy today, right? I have not sold a single stock in my portfolio. I will not sell a single stock in my portfolio. I sell stocks for one reason and one reason only. There's only one. If my expectations change about a business, if I bought, let's say, Tesla for an example, and all of a sudden they cancel their Optimus division, I will sell Tesla. I will be out of Tesla, probably forever. Robotaxi, that's going to be big, but it's not enough with, where people price the stock. Now, is that going to happen? No. Is Tesla going to cancel Optimus? No way in hell. Okay. I'm just making a dramatic example. Okay. Or it would be like if Airbnb said that, they were going to limit the amount of Airbnbs in Florida or something stupid. Or if legislation was passed that there can only be a certain amount of Airbnbs in certain areas. That's probably something to make you reconsider your investment, perspective. Or if Apple right now, Apple's taken a lot of grief for not pursuing AI the way that they probably should have. Like, is that a reason to sell Apple? Maybe not, but it's something worth considering. Okay, I don't sell a stock just because the price goes down if the business is doing good, right? Or improving it from that maybe that's a better way to look at it. If the business is doing well, just the stock's falling, I love that. That's perfect. And that's one of the reasons I love Tesla right now. Even where it is today. I mean, you're down 50%, but the business internally is doing very well. Okay. Now, if we go into a recession, Tesla's going to fall further. You could see Tesla at $100 a share. You could see Tesla in a like a bad recession, like $80 a share, or in like, you know, height of recession fears, like $80 a share could be possible, right? That was kind of where you were in pre-2020. So if I think the SPY could potentially get back to where it was in January, February, March of 2020, right before COVID, Tesla could do the same. And that's where the opportunity is. If that happens, you should welcome that, as long as you're not in margin and over leverage. And also in the meantime, I do think it's time to really make yourself valuable in your job, whatever you're doing, to try to excel in your career. Make yourself indispensable as much as possible. And obviously you want to get some skills, right? If you don't have too many others, maybe that's becoming an electrician or a plumber or something. You know, really, you can get certified in pretty much anything these days. Doesn't take a whole lot of much. Couple months, couple weeks for certain certifications. But that's just personally what I would be doing right now. Is trying to make as much money as possible to get prepared for what is coming. So hey, let me know what you guys think down below in the comment section. When the markets are down in the dumps, it's really going to depend on what makes the most sense to buy. Tesla's going to be right up there. But if like Apple falls to a crazy low price, or any other big tech name falls to a really low price as well, those are also going to be opportunities. Small caps, more risky names are also going to be opportunities. Like Carvana in 2022 fell to like $5 a share. That stock went up to 300. Okay, you're going to have a lot of opportunities like that as well. Obviously not Carvana, but there's going to be diamonds in the rough when that moment does come. And you want to be prepared for that. You want to be able to take advantage of that. And hopefully this video helps you to better prepare for it. Although I can't definitively say when we're going to go into a recession, when markets are going to bottom, or anything like that. The writing is on the wall, and it's only a matter of time. So get ready. Ladies and gentlemen, that is going to do it for this video. Hit that like button and subscribe to the channel if you like to make money. Have a fantastic weekend, and I will see you in the next one.